going for the trade settlement, because the trades are all dependent on the financing. So then you can bring in the exchanges, the ECNs, the ATSs. That's the electronic communication network. ATSs, they're just different forms of way of people coming together to transact. Then you've got the fund managers. You bring those guys in. So this is the way to sort of expand the industry, sub-custodians, the global networks, and then eventually the investment banks, and then you've got all the service providers, what I talked about, the administrations, the transfer agents. So this is us just outlining a way that to sort of say there's a way to grow into this technology. And like I said, the key thing is to have the interoperability, so you can absorb as many markets, as many products, or as many participants as you need to as you go. Whereas most industry things, particularly in the financial services, require these huge committees to operate for years just to get everybody to synchronize and dance together exactly the same time. So I'll take a diversion now. Let's look at supply chain. So you've got the idea, you've got centralized updates, you've got a supply chain owner. Each of the participants has their own data set and controlled process. So you've got limited data consistency, inconsistent quality, and inflexible dedicated process. And I'm just saying in a very simplified idea, you've got the idea of natural resources. You may take the natural resources to turn them into some material. A factory can assemble them, and you've got distribution. But the other thing as well is that the payments are made very late, like 60 days to 6 months later. It's called consignment payment. So this is a very inefficient place. Although supply chain software has made the individual stations probably more efficient or easier to manage, they've become very dedicated and very inflexible, which the pandemic showed up that while there was some efficiencies gained, it became very hard to sort of change your supply chain. So if you bring these under a distributed ledger in a single cloud, you've now got an interlinked, fully visible network with assets acquiring enhanced provenance data, allowing for faster payments. You've got real-time visibility into the network, and so as things are moving along, you can track them and arrange payments or letters of credit or trade finance to be overlaid on top. The key thing which you also try to say is people tend to think of the things that are moving through the supply chain. But in our discussion with service providers, you also want to track the vehicles that provide transportation, the machinery that actually processes the goods. So you can track anything and everything in your supply chain, not just the goods that are moving through it. And that's another benefit. Now, the problem with this, though, if everybody can see everybody, then there's a lot of secret information or confidential information you don't necessarily want to share. And this is where these concepts of these airlocks, because this is the physical to digital interface. This is saying, this is where something happens in the real world, and I'm replicating it as a digital asset. But if you can actually segment the ledger or break it into a network of networks, then at this break point, what we're saying is there might be some confidential pricing data that's between these two parties, but when the asset moves from here to here, the provenance data, the quality or whatever goes forward, but the pricing data doesn't. And so you can then control that process. So again, looking at the use cases, the benefit of the distributed ledger is to provide as much access as is needed, but you want to be able to break it up into a network of networks so that you can retain confidentiality or control. And obviously, with different suppliers, they may want to participate in the network, but they don't want to share information with everybody. But on a permission basis, they can share the data. The supply chain owner may be able to see all the action. So here's an interesting one. We all talk about the crypto DeFi, and there's been a lot of scandals. Now, although they say, I may be jarring a few people here if you're into the crypto DeFi world, although they say it's decentralized, I challenge you that it's not as decentralized if you look. We've just explained the financial services as today. So you have an over-the-counter, meaning a bilateral execution, or you've gone through an exchange. This means I've agreed to buy or sell something. Okay? If you look at the crypto DeFi world, you go to a crypto exchange to execute your buy or sell of crypto or your transaction. Or you've got a smart contract in a life cycle, which could be a DeFi protocol, to say, I need to do something. That looks like an over-the-counter transaction. In the legacy world, we then instruct our transaction to a clearer or custodian, have some form of trade matching, and then through what we call an AFO process, the trade is settled at a depository. Well, if you look at the DeFi world, I know there's a few exceptions, but most of them explain to their crypto custodian, get through a smart contract, and record it on Ethereum, which now acts like a central clearinghouse. You may have a transfer agent, again, tracking the ownership of a certain security. It tends to come from the depository data here in the real world. It may come from the crypto exchange or otherwise in the other world. But you're beginning to see how these two groups that are supposed to be different actually look the same. And if you've got regulated issue securities, when investment banks create new bonds or new equities, they're issued through the depository. Well, you create a crypto or TOFI token, you through a smart contract, you're recording it on Ethereum. So again, these two systems look actually the same. So for the benefits of intraday settlement, consistent infrastructure for all assets, and crypto and digital assets here, this looks like a better way of doing it. But the problem is you've got performance issues. They can't scale. They don't have the capacity to handle real market volumes, and they're slow. There's no accounting in these blockchains. So they're untenable reconciliations. There's no payable receivables. So you can't run projections. You can't do future debt accruals or obligations. And there's truly no spread-based financing transactions. Although they talk about lending cryptos, they're really staking it as an unhedged swap. They're swapping into another asset and hope that asset accumulates greater than the one you started with. They're not actually borrowing at, say, 4% and lending at 5%. And then the real problem with this world is there's no legal recourse for regulated or fiduciaries. And this is why the legacy TradFi world has had a hard time getting into this world. It's also why the DeFi crypto world is having a hard time taking over legacy finance. So our solution is to say we've got our airlocks, so you can have escrow digital assets, or you can have mobilized legacy assets, and then you have a network of nodes, and this is just the idea of a distributed ledger on a B2B basis through hosted clearing guys. And as long as you're tied to a regulated digital exchange, or you can undertake over-the-counter in bilateral transactions, then they can all be instructed on this this platform. So I don't need to go through these steps. This is just part of one of our things. But we believe we can offer a regulated solution to the crypto DeFi world for the regulated fiduciary institutions. Now, if you're looking at CBDCs, and this is where I can scare you with accounting. You've got a bank's capital reserves actually, and then customer deposits. This is how a commercial bank works in terms of their balance sheet. And they've got loans and capital assets that they've got on their asset side, and then the profits is the retained earnings. And then they can borrow money to finance the positions. A central bank has some form of capital, but it's the reserves from the bank is actually posted on the liability side, and then they may have securities, gold, foreign reserves, or commercial bank loans. That's where they lend back to the banks. And you've got coins and banknotes as well in terms of if they've got them to store. So if we're looking at a CBDC, what it really needs to do is you've still got the elements we just talked about before. I'm just going to pull them back in again. But the difference is, I'm trying to get them back. So we've got them all the same. I didn't realize this was so animated. But what you do is, the point about a CBDC is that it needs to be off the commercial bank's balance sheet, because if it's going to be available to be transferred in real time, it cannot be in part of their reserves that they can then lend against. And so the point being is, what you really want to do with a CBDC is issue it digitally, and then the bank can choose to transfer it into all this is saying is that there's assets held and the CBDC exists. Well, that's the same concept for a stable coin or a digital fiat. But the digital fiat, if it's held in the bank's accounts, can be lent against and therefore earn interest. The CBDC cannot. But what do you want the CBDC for? You want it for real-time payments and simple liquidity. Well, you can process it, but the minute you don't need it, the bank can transfer it easily back into a digital fiat from the CBDC or from the fiat to the digital fiat to the CBDC. So this is the type of transfer. You want to make this simple, and it's transferable. And therefore, if you put it on deposit as a digital fiat, you can earn interest, but it's no longer available in real time. And again, in the same way the banks and brokers, fund their trades one day in ahead, a bank is looking at all this activity up here, and it works out every day what's its financing position going to be as of the next day. So it's borrowing the next day to cover what it knows is its deficits, or it's lending its excesses. If you bring this to real time, the banks have got to have their intraday financing as well. So while real-time payments is available today, it's really for retail clients only, because their transactions are so small and tend to net with each other compared to the trillions of dollars moved between the global institutions. But the global institutions are financing their positions, so you have to take that into consideration. And so what we're proposing is the banks act as a hosting node. They can immobilize, the central bank can immobilize assets to issue CBDCs, or a trust bank can immobilize fiat currency or securities to create a stable coin or digital fiat. And these hosting nodes act as the nodes, again, to do B2B transactions. But the point being that if you've got commitments, payable receivables, they can be netted, they can be accrued, they can be financed intraday. So we've got here. So the other DLTs that I haven't covered, voting. Voting makes very interesting. I'm part of the voting group in the GB Government Blockchain Association. The challenge with voting, like the challenge with a lot of transactions, is you want confidentiality, but you want to know your counterparty. So the bank in our networks are the hosting nodes, so they can still do KYC, and the only data needs to be shared. But when you get to an election, you want to be able to confirm a voter has voted, vote as cast as intended. But you don't want the record, you want to be able to check that that's one-to-one without actually revealing the identity of the voter. And then there's a whole process of voter registration and election administration. So there's lots of use cases in voting. We're looking at it because ultimately a vote or a voter is just an asset to be recorded, but we're not experts in the workflow, but we're trying to partner with people who know it. Identity, I think this will be one of the last things to drop, because like everyone wanted to see things on the internet working before they really gave up their personal data online, I think you're going to see lots of transactions happening before people trust a distributed ledger with identity. There's other logistical issues with identity as well, which I can get into if people want to in the Q&A. Healthcare data and records management, they're just assets that are, PDFs or other data. Real estate transactions, title insurance, these are all areas which are being looked at. The metaverse is really exciting because although I've got some questions about the value of NFTs and the utility of cryptocurrencies, the metaverse is a working economy. Internet of Things. And so, the Internet of Things is obviously somewhere, but again, that's going to need a lot of coordination between a lot of different transacting infrastructures. But I think once you get through a lot of the use cases we've talked about in the financial services or these other ways, then moving to IoT shouldn't be so hard. So what are the critical requirements? It's got to be configurable for any asset or life cycle. It's got to be processed in real time, and the DLT has got to have a high performance, meaning it's linearly scalable and it's high capacity throughput. It's got to have double entry accounting because you're a ledger, and you've got to be able to do reconciled transacting periods, which most blockchains don't have. They're just a continuous chain of timestamp transfers of ownership. You've got to be able to record obligations, not just bilateral transfers, which is what happens in most blockchains. And you've got to be interoperable with legacy infrastructure or other networks. So those are what we think is what a distributed ledger needs to do, and that's what we built Tapestry X to do. So as far as assessing blockchains, there's two things I wanted to mention. Go to tapestryx.com. I've got 10 distributed ledger design considerations and 20 due diligence questions. So you can take a blockchain solution and assess it against that. And then with the Government Blockchain Association, I've been part of the groups that have developed what we call a blockchain maturity model. And that looks at any blockchain, but we've got supplemental requirements for banking and finance in place now. They're working on ones, the working group for voting, healthcare and data records and identity are working on their standards. So I'm going to drop my links in the chat. So if you need to get to my YouTube site, my LinkedIn site, or our company site on LinkedIn, or our website, those will be in there. Thank you, and I will now turn it over to Q&A.